All right, welcome everybody. It's recorded and welcome. So Mike and myself with TradeX, we're here live again with you. I'm just going to drop the link in our Discord, make sure everybody has the link, and we'll get off to a start here. Big day for Bitcoin, big few days for Bitcoin, seeing some big movements, and we'll see where this goes. You can see based on the chart that I have up here, the way I've been looking at it is pretty tight. I don't have a lot of expectation that we're getting a whole lot higher, and we'll see where that goes. But let's go over that chart very quickly here and see what happens next. So on Bitcoin, the way we've been tracking it here, we've been able to follow up with kind of the same pattern that we've been seeing this whole time. We got our breakout. We got to pull back onto the breakout of the major trend, which is the whole macro trend on the way down. And we said, look, this could be the FOMO rally coming off the bottom here. Let's see where we can get to. We had levels identified here. Clearly, we've got the top end level that topped out at about 25,200. And then the absolute top of the FOMO rally in my charts and in my mind is that 28,500. And it looks like we're pushing for that. But we also have this tight little trend that we've been stuck on. And we are really, really respecting those higher levels here. So we may not get all the way there. This could be the end of the FOMO as we're heading into the weekend. The dollar index, the stock market, everything's closed down. So all this excitement that we've been having might wear off, and that might give us a chance to at least do a retrace back into kind of the 23,000 area, more likely back down to the 21.5. But there are a lot of bullish people out there right now. I was just talking to Mike, and even he said, I'm starting to get a little bit bullish, and I'm saying it. I said it before, I'll say it again. I think this is a FOMO rally, and I don't think we're done with the damage yet. But that 28,500 level is a really important level for me. That is kind of where I'll be looking to move into more of a bullish stance as opposed to a bearish one. And with the pace that we got off the floor here, the pace that we've been putting in this week with the banks collapsing all around the world, it's really not that surprising to see the energy come in and kind of break the structural low and then come up and kind of wick out the top end, let that excitement exhaust itself before possibly pulling back into the typical more controlled pattern that we've been into. So we've got a couple tracks here on how we're getting into both of those locations. So are we bringing it back to 21? That would be our retracement. Or are we going to continue this on up to the 28.5? And I think both are valid arguments. And at the end of the day, the market doesn't give a crap what we think anyways. But we've seen a big rush here. And I am definitely looking for some relief out of that and take some of the energy out of this push. I do continue to think back to, and I know Mike will remember this as well, how quickly did we come off the floor back in 2018, 2019? That was a blistering, mind-boggling pace getting out of that lowest level. After all of the hurt and the pain and the disbelief and depression that was caused down through the break of that 6K level, this push off the floor caught a lot of people by surprise. And despite, in hindsight, the patterns, the fibs, the trend lines, everything was pointing to the same thing, not all that many people got in before it started up onto those second levels back into that 6,000 mark.
They never gave you an entry yet. They just took off and kept going, not until the COVID crisis in March.
So here we are, we're retracing. We've got, Mike's probably going to go over the fibs a little bit more than me. I've just got my levels and I've got my locations, but that's the way I'm looking at it personally. I'm still bearish. I'm not a bull yet. And that is my mark. My mark is 28.5 for me to start moving my system from a transitioning market into a bullish market. And if that comes, great. I think we've got some fabulous highs above us. I just really believe that this industry as a whole, not just the market, is in for a lot more damage. And I do believe that the macro economy is likely heading into a difficult, albeit different type of recession, and not to be compared with anything recently. But I do believe that there's a lot more trouble coming for a lot of people. And I don't think the markets are going to continue kind of responding in this sort of way that Bitcoin has. And while I want to believe this is a bit of a flight to safety, I would argue that perhaps that's not the case. On March 14th, Tether started printing again. We've only got 1 billion, I believe, printed in all of 2023. On March 14th, we printed 2 billion back to back, one on Ethereum, one on Tron. And then you scroll up the list and you get up to just 22, 23 hours ago, and all of a sudden we've got another $1 billion print coming out for Tether. And we know what happens when Tether prints, right? We watched the last bull market, right? We were there for that. There's your other print. There's another 3,000 printed there. And so as we get into the charts and we look at what happens when Bitcoin starts printing, well, the last time, Ethereum starts Tether starts printing, the last time Tether really started printing was through this stretch into the bull market. It is the largest liquidity provider. With the trouble with BUSD and more recently USDC and Circle, we have seen a massive demand for Tether. Imagine that. The one that's not safe, the one that's not with traditional banking and regulated, was the absolute safest stable coin in the industry recently.
The meme that I kept seeing was no bank equals no bank run.
Exactly. That's exactly it. So a very, very interesting kind of turn of events here as we're getting a lot of liquidity pushed into the marketplace. We're seeing banks basically imploding across the US and around the world. Governments are bailing them out for hundreds and hundreds of billions of dollars. This isn't over. This doesn't stop by by handing out these loans. And that's why they don't want to call it a bailout, because they're loaning the money. And most of these loans are for exactly a year, which takes us into a US election year. And where are you going to get $164 billion in a year? How are you going to fix this problem in a year? You're not. This is unrealistic. This money is never coming back to the government. And I think it's pretty fair to say that the larger banks are definitely going to get larger. Small and mid-sized businesses, industry as a whole, within kind of innovation is going to hurt, because these smaller community banks are the ones that give them the loans. And the fewer and fewer of those there are available, and the more damage that's done, the more restrictions they're going to have put on them. And we're going to see a big, big change in the banking industry. And that comes on the shoulders of, guess what? That's right. The US is launching their own digital currency called FedNow. It's going to be an instantaneous, not central bank digital currency. They're saying it's not on the blockchain. It's not a central bank digital currency, but it's pretty close. It is. It's the same thing. It is an absolute monitored, controlled finance tool for the government to have more power over what happens. And if you're following what's happening in China and other places, they can do things like put expiry dates on it. So if I get paid this Thursday, I got 14 days to spend it, or my money just disappears. They could do things like that. Well, I think that's to the extreme of what we're going to see in the US right now. These are possibilities, and it's all the more reason to turn around and go, I do like Bitcoin. So moving into Bitcoin for safekeeping, yes, absolutely. There's an argument, but we have a lot of other components adding to that here. And the last thing I'll say fundamentally before I hand it over to Mike is that the Ethereum unlocking for the locked Ethereum 2.0 that's on the staking platform, that will be available to be released. It got delayed. It was supposed to be this month in March. It will be delayed until April 12th. And that's when we'll see a big unloading there. So we've got Mt. Gox coming up in October, but they're not threatening to dump really. We've got a bunch of Ethereum unlocking next month. Lots of little tidbits going. Keep up with us in the Discord. In the description below the video, you'll find the link. It's free. Drop into the Discord, keep up with some of the fundamental stuff, drop some charts, and come chat with us. We'd love to have you over there. But with that being said, I will hand it back to Mike to give us his perspective on what's going on out there, because things are pretty crazy right now.
They are pretty crazy. So I will steal the screen from you here. And I'll start off with your chart here, because I like this one. I haven't looked at it in a while. And one thing sticks out to me like a sore thumb. And that's this candle for today. That is a higher high above the last peak of the downtrend. And you can see that when we came to that spot, here we're going down. There's a big downtrend channel. We've drawn it many times. And you have these lower highs on the way down. And the first time you kind of go, maybe we're doing a higher high is here. We rejected. Then we got to the exact point of this second to last high on the downtrend and strong rejection. And keep in mind, in the context of things, I'm going to switch over to my chart here. We had broken out of this long-term downtrend channel, right? So we peaked here all the way back in November 21. right at about 69,000 Bitcoin, right? Big jokes on us. And downtrend channel starts. And we just kind of go crazy for a while, straight down. Now, day to day, it doesn't feel straight down. But when you zoom out over the course of a whole year and a half, it's pretty much down. You have lower highs, lower lows, all the way down. We continue to go until today. Today is really the first time that entire cycle where we broke above a recent downtrend lower high and we made a higher high. And that's after the initial rejection point. So we rejected once. Bears lost the fight here. And notice all of the volume coming in on the buy side when we bounced off the top of this downtrend channel. And if you zoom all the way out, all the way to 2015, I'm going to have to go to a 3-day to even see it. Here's our long-term log trend line. We slipped below it for quite a while. Only time in history, except the initial beginning of Bitcoin, that the price has gone below this long-term log trend line. We came close in COVID in March 2020. That was the closest we came since 2015 being on that trend line, until we finally, in recent times, broke below it. And we went sideways. And you can see the selling was immense to break that trend line. The volume kind of subsided, and we got that initial push back off. This could end up being the bottom. It could be. It very well could be. And the more that we push up, the more, even if we have a healthy pullback, which I'm not opposed to at all, by the way, I'm totally fine at this point if we do a pullback. And in fact, you can see off the initial push, we already did a pullback and we had some nice selling into it. And the buying said, no, we're not going lower this time. This is a higher low. This could be the turnaround point we've finally been waiting for after over a year. Now, TI is right. We can't just put our guard down. We can't go to sleep. We could have a nice little retracement in here locally, all the way down to 22.4 and be totally fine. 618, love it. Nice retracement. And in fact, if you look at coming off the bottom to that initial hit where we had our lower high, we went to the 50 almost exactly. Perfect, solid bounce right off the 50. That's beautiful. That is beautiful, bullish, positive energy retracement met with fantastic buying volume that completely overrode the selling. If we were in a bull market, if we were 100% certain, yes, we're in a bull market, that's what I'd expect to see all over the place. I'd expect to see a nice, healthy, strong buying leg up, maybe a little bit of what are we doing for sure, and then a solid pullback where we liquidate a lot of longs, we get rid of a lot of liquidity, we do our cleaning up of our initial push. The 618 would have been maybe a little bit more of a cleanup below, but a 50 is fine. That makes total sense. That is very bullish. So TI and I were joking before the meeting. I said, I might be getting a little bullish. For the first time since the all-time high, I may be a little bullish. Now, does that mean that that everything is over with? We can buy everything we want. Risk is over. Just throw money at the market? Absolutely not. TI has been dollar cost averaging buying every week, and I'm sure it's looking great right now because this is the high point that we've been at since that whole process has begun. If you had started buying after we dipped in the long-term trend target, and you did what TI did and bought a little bit every week, you are at the highest point that you have been at since you started that process. All of your buys are in profit. Your entire dollar cost average portfolio is in profit. Now, anytime your entire portfolio is in profit, that's the moment when you have to stop and go, is this where I need to take a little bit of that profit? Is this where I need to kind of reduce my risk in case of a pullback? Now, if we are truly going bullish and this is the start of an uptrend, you don't have to. You could leave it alone. You could let the pullback come and you'll be just fine because your average is somewhere down here. And it's highly unlikely if we are turning around here, we're going to go lower than this potential giant left shoulder of a giant inverse head and shoulders. So if you know your chart patterns, this very well may be somewhat of a sloppy inverse head and shoulders reversal. It's not perfect. It doesn't have a great neckline. It's a little bit of one there that may be happening. But you can see 3 peaks of volume, possibly a third one here, leaning into the buying on the last one, possibly driving a market reversal. This would be much more akin to a traditional market type of reversal than we've seen from Bitcoin before. Bitcoin in the past has had very sloppy market reversals. They don't look very textbook. Some of them have elements of textbook reversals. Here's a nice triangle or a wedge, depending on how you draw it, reversal. But then you come down and you look at the volume profile, and all it does is kind of go flat until the breakout point. There's not a lot to really pick from in there. There's a couple of buying points, but it's not textbook. It is not clean. You can't just point to it and go, I can find that in my candlestick guidebook. No, you're not going to find it there. You will find elements. You will not find that perfect example. But here we are with a pretty nice left shoulder, solid volume, with buying included at the bottom after the turnaround, a possible head with a significant low here. This is an important point because we broke that line and we went down into the bottom lowest point of our downtrend channel. And we came out of it with buying. And it wasn't until we retested where that potential neckline would be of the shoulders, the head didn't quite make it all the way back up there, that we finally got the sell-off. And you can see the sell-off volume was the weakest it's been out of those 3 points, those 3 low points, and the buying is now taking over. So I have lots of reasons to start leaning bullish. My guard is not down. The fundamentals are not strong yet. There are many what ifs in the air. We've seen USDC come into question. We saw people dumping USDC for USDT, which to me is pretty hilarious. I get why people did it, but it was an emotional, irrational move. And in fact, the more you dig into the situation with USDC, the more you should realize they would survive if one bank they're in goes under. They'd probably survive if 2 banks they're in goes under. Does it look good for market optics? No. But the fact they're spread across multiple institutions tells you they're not going to just go bankrupt and shut the coin off. And in fact, the institutions they banked with were solid enough that the government stepped in and said, we're going to shore those up and ensure that the depositors can get to their funds, which means USDC didn't lose a single dollar. And when you really dig to the core of it and you start going into the background story there with BlackRock having got involved in the recent past, you start to go, have we seen this before? And if you go back and look at the last bailouts in 2008, a lot of the entities that should have collapsed were tied to these big names. And what happened after the bailouts occurred? A lot of those entities actually reduced their debt. And if you consider the fact that Circle USDC coin was at a discount for a few days in the highest amount of liquidity it's ever seen, could they have reduced their debt on their books with this crisis? It's possible. We have no way of knowing. They're not going to open their books and show it to us tomorrow. We may find out a couple of months from now, there may be a financial attestation or some kind of a review that comes out that says, hey, everybody inside Circle knew that they fixed a problem here. We, the retail traders, don't get to find out until later. But that is a possible scenario here, that this whole dip here and this whole crisis here may have been fully taken advantage of, and we may be good to go now. We may have cleared some situations up. Now, it's interesting to note also, if we come over to our Bitcoin 1CME futures, that whole thing gave us the opportunity to close that gap. We had a nice little gap there we were waiting for, and we've closed it. Now, we left another one behind, but I will put that with a caveat there. It has something to the left. There was liquidity exchanged in that area versus previously there was nothing. No orders, no nothing, until you were all the way back in this high volume selling. That could have been rectified here in this candle. We could have fixed this, right here, and we may not need to come back for this for a very, very, very long time, if at all. Maybe not until we have a true Bitcoin downtrend cycle after we've made a grand super cycle top. I mean, we've never really seen Bitcoin make a true market downtrend. If we zoom all the way out, Bitcoin only goes up. There is nowhere on this chart where Bitcoin has gone big picture down and made lower lows below this log trend line for an extended period of time. Will that happen at some point? It's hard to say, because you go and look at traditional markets and it's the same thing, isn't it? Only sideways or only up. Zoom all the way out. They've never really turned down, down. I mean, that tells you something. And it should make you stop and wonder, why does that happen? Why can I look at the S&P going all the way back to 1929, Great Depression, and it's gone one direction only in the grand scheme of things? Now, you can say it has to do with population, with progression of production, with all kinds of elements of markets maturing over time. But there has not been a major crisis enough to turn everything around. And ideally, there shouldn't be. If everything is working correctly, that shouldn't happen. That would be a sick situation for the world. Could happen at some point, but it hasn't happened yet. So I digress. I come all the way back. Here we are at Bitcoin. This could be the turning point. And if it is, we're going to start to see more signs of bullish behavior. Smaller pullbacks, stopping at the 50 and the 618. Impulsive pushes upward, the same way that we went downward. When we were in a downtrend, all the impulsive moves were down. You can't find in this downtrend a single impulsive up move with significant buying volume. It doesn't exist because it's a downtrend. Now here, for the first time, we're seeing a little inkling of maybe we're ready. Maybe we're ready to return to some action like this. Here's your push up. Here's your buying volume going straight up. Here's none of that. Totally different profile until now. So really pay attention. Pay attention to what's going on in the charts. Pay attention to the fundamentals, because right now the fundamentals in the charts disagree. And when you're in a situation like that, there is uncertainty. It is easy to be manipulated by doubt, by fear. That is the whole point of the news cycle integrated into this market. And if you don't think that's true, you haven't been doing this long enough. Because if there's one thing I've learned at this point, it's you can never believe that you know the answer if everybody else has the same one. I sat in the RTM market channel Discord when the bank started collapsing, and there was a couple people in there were like, it's over, everything's collapsing, we're finally done, sell everything, I'm going short, go short on everything. And I sat there and I went, you're really going to go short after we spent a year in a downtrend just because you're reading news articles that are telling you that we're done, we got to go lower. I'm like, that's when they get you. That is when they will get you and put these green candles in and take your money right off the board. Because this is nothing in the grand scheme of things. But if you are leveraged 5, 10, 20 times, you might as well just give your money up at that point, especially if you went short after those candles came in. Now, if you're a scalper and you know what you're doing and you went short here and you got out in a week, took your profit, that's one thing. But if you're a trend trader, if you're a big picture trader, if you're a beginner and you think it's going to be easy, and you think you've read your news articles, you understand basic economics, and you know banks failing is bad, it must be bad, everything must be bad, you've got some lessons to learn. They're probably going to cost you a little bit of money. Decide how much tuition you want to pay, and please put your stop losses on board, because we have all been there. We've all been there. So I'll stop with the little bit of the lecture there, but Again, Bitcoin breaking a higher high for the first time. And something interesting that we're seeing that we haven't seen in a long time, which also makes me think that conditions are changing. Ethereum didn't make a higher high, TI.
Been watching that. We've been talking about that in the market update videos with the community members. Ethereum is doing very little. They're really not providing the same energy to either side of the market that Bitcoin is.
Which
and
is
the Ethereum Bitcoin chart is just on the edge of
boom.
Something. And
Beautiful. We have been watching since these fibs were pulled. There's a reason why that 618 is red. Bitcoin is waking up. Bitcoin likes to lead. Every other bull market we've had, TI, it's always started with Bitcoin. Always. Bitcoin has been the initial move and the alts follow. That happens at the peak of the cycle. It happens at the bottom start of the cycle. And to see this happen right now is another ticket in my corner that we may be turning bullish. It may not be here completely yet, but that gives me faith. Come look all the way back over here. This chart doesn't go back far enough, but we can make an argument here. Here's 2018. Ethereum going down on Ethereum Bitcoin here at about July 2018. I would like to go before 20. I'll go in a second, see if I can find another one, but July 2018. Bitcoin's ahead. Ethereum dumps. Then Bitcoin dumps, Ethereum dumps more. Bitcoin finally drops November 2018. Right in here on the ETH Bitcoin chart. The alts got a boost from Bitcoin dropping afterwards. The alts get a boost from Bitcoin pumping afterwards. It's always after. And so this initial lead off on ETH Bitcoin going down, as soon as this checks in at the 618, I'll think maybe Bitcoin's going to take a breath. Maybe Bitcoin is truly going to do that pullback I'm looking for. I don't feel like it's there yet. So I'm starting to lean towards TI's target up above at about 28.4. I could see Bitcoin going straight to 28.4, pushing ETH Bitcoin here, then bringing a pullback in, which corrects this chart and a lot of the alt charts that are happening. And if you're paying attention to alts out there, this is the first time since I can remember, since the downtrend started, that you can find alts that ran 100% in a week. More than one, not an exception, not like some new mainnet or some new thing came out. There are multiple alt charts out there where over the course of the last week, they have run 100% or more. And all these little signs add up to me to Bitcoin having a good time in the near future. And the DXY is just another drop in that bucket, because the DXY had been running, pretty much came to the top of the channel here, and now has pulled back A, B, potential C wave coming. If the DXY makes a dump here back to the bottom of this trend line, that is an opportunity for Bitcoin to run. When's the last time it touched the bottom of this channel? That would be January 21 and May 21. What happened to Bitcoin? January 21, right in here. May 21, right in here. That was our initial part of this top. So when the DXY gets weak, Bitcoin likes to come out and make significant moves. And here we are, Bitcoin sitting right on the trend line after a huge cycle of dumping, of fear, of FOMO. A lot of people got rid of stuff, are now out of positions, are trying to decide, should I get back in? I don't know. I took losses. Maybe it'll pull back. It may not pull back for you if that's your situation. And in fact, that is ideal for a market maker. We got you out. We got your money. Now watch us ride with it. So I have lots of questions and I don't have a lot of answers right now. The S&P and equities suffering in the bank situation, but in the grand scheme of things, really? For all the noise they've been making, you're talking less than 10% in the past 2 weeks on the S&P. The Dow Jones, less than 10%. I mean, if this is truly a market-wide crisis, why is it not spreading to everything beyond banks? And it may in the future. We may see that in the future. But so far, nothing on here says to me that the whole system is melting down. The only thing that says that are the articles that are being pushed out and sponsored and telling me that the whole system is falling apart. But when I hear things like this bank contagion and all this stuff, I came up into the chat in again, I'll go back to the RTM chat I was having, and I said, it was supposed to fall apart in 2019 when all the CEOs left their jobs. It was supposed to fall apart in 2020 when COVID hit and everything closed down. But then you had unlimited quantitative easing coming out. What does that mean? That means we can print all the money we need to keep the balance sheet rolling, essentially. And then you had 80% of the US dollar supply printed in 2 years. Inflation's coming. They don't care. You had $1 trillion overnight repo markets taking place. The Fed buying securities that are at a loss and basically just giving money away to institutions. You had, for the first time in history, banks at a 0% reserve rate. That is insane. That means that a bank literally has to keep as much cash on hand as we can prove Tether has right now. Zero. And I know a lot of people will argue with me. Tether has money in offshore accounts and is being worked on with billionaires. And that may be true. Tether has all the money they say they do, but we can't prove it right now for certain. And at the end of the day, we can't prove banks have the cash on hand they have for certain anymore because they're not legally required to do so. So whatever they tell you, you have to take with a huge grain of salt. You can't just trust it blindly because the rules have changed. These are not your mom and dad's market rules. These are not your grandma and grandpa's market economics. None of that is being played by the same rules at the foundational level. The reserve rates are supposed to be the underpinning of the security of the banking system in the United States, which is backed by the US dollar, which is the world reserve currency. It's supposed to hold the whole system together. And they basically were just like, you guys, it's smoke and mirrors anyway. It doesn't matter. We can change the numbers on the computer screen. Didn't you know? We're in the digital age now. So I sit here and I look at this, and Giorgio and I, those of you that remember Giorgio from Elliott Wave, we have been talking a little bit about it over the past week, and we keep going back to, but what do the charts say? Because over the past several years, since 2017 to now, the only thing that I have seen that has been consistent is the charts end up proving that what they're telling you is true in the end. And if that is true, what this chart is starting to tell me is that this may be a reversal. And I can start to.
Oh, here comes the FOMO.
If I can get this flip tool to work.
I don't think I've ever seen you do that before.
Yeah, it's being weird right now. There we go. Look at that 786 hit too to the money.
Beauty.
The next big wave target.
Laser
106K. 106K.
Everybody's going to have their laser eyes back.
And won't that be a beautiful spot to get everybody locked in, because it's at 100K. Now it's got to go to 250, you guys. It's got to keep going forever. And how long have we talked about 100K? And this 1.618, perfect spot for a hefty pullback. Right off of that support resistance if you're looking down, but support bounce. Right where they peaked when I thought we should have done a true market reversal before all of these situations changed in the middle of COVID, and we kept printing money and we just went on a party. So in the grand scheme of things, if that's where we're going, and honestly, I think at some point in this cycle, that's where we're going, whether or not it's 106, 120, 98, we're going up to that six figures because it's been talked about for so long. It is ingrained into the market psychology at this point. Anything down here is fine. If you had the fortitude to walk away from the chart and you put some money in Bitcoin at 26 and you don't care if it goes to 22 and you're not going to stare at the chart every single day and cry because you're upside down 20% or 30% because you're looking for that 4 times, you can't miss right now. Do you need the exact bottom of the market to make money? Absolutely not. You just need a plan and you need risk management. So TI, that's kind of my Bitcoin situation here. I think ETH maybe pulls back in this a little bit. And I think Bitcoin ETH is going to go to that 618 before all is said and done. It may even creep a little lower to fully fix this candle, which is fine.
Yeah, could see that.
And I think your DXY is in for a bit of a hit. And hopefully that helps cool inflation. And this may be fueled by the Fed starting to look at a pivot this summer. What is a pivot? A pivot is the Fed has been raising the cost of borrowing money to banks month over month endlessly for months now to levels that are so high we have not seen them in decades. In most of our lifetimes, rates for the Fed have not been this high. And it's because they were trying to stop inflation. The theory goes, the basic economic theory goes, if we raise the cost of borrowing money, it will decrease demand and therefore bring inflation prices down because we'll have less lending, less borrowing, less pressure on buying goods and services on credit, which is the way that a lot of people buy it. If we can stop people from buying things while supplies are not changing, relatively speaking, price should come down. Law of supply and demand. Has it worked? A lot of people will say no, but the hard part to get to people's head is that price is a lagging indicator. Price changes not in real time, but after the fact. Price goes up like beforehand and sits up there because companies and people that make money are greedy and want to maximize profits and waits to come down later. So you're not going to know whether this whole situation of raising rates has truly worked until you start hearing things like the housing crisis. Prices destroyed from houses because they ballooned so fast. Now interest rates are so high, mortgages are so expensive, nobody's buying houses. Prices have finally come down. Car prices should come down. Computer goods prices should come down. Food prices should start to come down. And if that's true, if that's coming, if the Fed believes that that is coming next, because they're trying to look ahead and predict and react beforehand to kind of offset that lag, then we should start to see the rate at which the central Fed banking rate increases should come down. They're already saying maybe only a 50 point increase, 0.50, when we've seen 0.75 and 1.0 increases in past months. They could drop to as low as 0.25 and they could go, wait, we're going to pause raising rates. And if that happens, we may see conditions start to shift. And that will only feed into the narrative that Bitcoin is bullish again.
A lot of what ifs.
A lot of what ifs, but I like it. I like it a lot. We've waited so long. I'm ready for it. But I'm cautious about it. I am not throwing everything I have at it. If they pull back for me solid, I could add a little more. If they break away to this 1.6, I know they'll come back at some point. So I am in a watch and wait kind of a mode. I've got some positions. I've got some things like my Raptorium that I've had through this whole bear market that I just accumulated. I've been building my node situation on the side. Now's the time to watch. If you didn't have plans already, you're a little late. You may need to catch up, but you don't want to go out there and throw everything on the table. So
definitely not. I'll grab the screen. Let's take a look at what the alts are doing through all this. Going to be interesting to see how all this is playing out within the alt charts. So we've got a number of them here. This is our top chart section. When we're actively trading into the market, this is where we'll monitor those. For now, it's been mostly a place to watch for opportunities. Everybody kind of has their own system. So we just look for the risk to reward opportunities, the things that are set up. And these are some of the ones that have been out there. But with the volatility we've seen in Bitcoin, it's been very, very sketchy alt trading lately. Some people have done very well. Some people have done very, very poorly. And I think making sure that you have a plan and a risk management system first before trying to worry about your profits It's an absolute must out there. So let's get into some of these. We've got ILV. This is a gaming project. This is a gaming coin. And we're watching this possible bull flag show up. It's getting big. It's getting a little bit strung out, but it's held it really, really nicely. This is kind of how you would measure a bull flag. If you're unfamiliar, you kind of have a flag pole, and you've got the flag itself, and you measure that flag pole coming out, and it gives you an approximate target on the other side. So we're looking at that 150, 160 range. And on these alts and other charts, you'll notice, especially if you're in our training, cleanup candles are mentioned quite a bit. So as we look left here, always looking at our price action left, where has it been? Where is it going? What's this hanging out here? This is orders on the books that the market makers are going to want to clean up. And that's why we call them cleanup candles. And where does that align? Well, just perfectly with that target. So an interesting one here, smaller cap coin and something very specific. It's the gaming industry. But I think as the market turns and through the next bull cycle, we're going to see gaming, not just NFTs, not just metaverse, all of it together is going to be really quite a significant market as the digital age of not just finance, but the digital age of our society of even developing countries is moving largely online. The idea of gaming, metaverse, NFTs is going to change dramatically and become very, very influential. And this might be one of those ones that's kind of out in front of that possible trend that's coming. So this is one we've had on our charts, and we've got this idea up here. Risk to reward sitting where we are right now isn't too bad. Again, as you're looking left, you try and find some levels that make sense. And you'll see a lot of straight lines on people's charts. Don't get too caught up. Don't get too caught up in straight lines. You can see we've got a top here. We definitely have the bodies topping here. We've had some trouble through this zone here. And even recently, we've acknowledged the top of this area of support and resistance. So we're kind of sitting right in there. And right now would be a tough spot for me to kind of jump in front of this. I don't typically go down to lower time frames myself, but jumping in front of this on a chart like this, if you're getting really aggressive, you can get away with tight stop losses. And that's not the way a lot of people trade. The thing is, the percentages on this are pretty spectacular. You can get a 2-to-1 without even actually doing anything. And even just coming up and possibly looking for some cleanup candles at the top, you're getting some pretty good risk to reward options here. The way you balance your risk in the market when you're trading is with your position sizing. If you don't know what that is and you don't know what that means, get over into the Discord, ask about it. We've got lots of resources to help you out. Let's skim through some more of these real quick. Render came in, they did the ABC off the failed second top here, and they came right back into that level that we were looking for. Again, like a lot of charts, a little overexcitement at the bottom end of it, but certainly turned very, very quickly and is pushing back into the 50-day moving average here, well above the 200. Not a spot I'm getting into right now, but it's one that we are watching and some people were able to take advantage of. SNX, this widening wedge happening out here. Now, this comes after a huge macro breakout, and this is what's happening across the board. Alts that have been in downtrend since 2021. We're talking a full 2 years. March 2021 was the peak back here, February 2021. Full 2 years of this downward cycle, and the alts are just starting to break out. Curiously, though, not many of them are doing it very well. They're nasty, low volume, sloppy breakouts, and not many of them are setting up the really bullish structure that we would expect off of the bottom like we saw in 2018 and 2019. And this causes me to pause a moment and say, is this really the time? Is this really actually happening? But like Mike described earlier, Bitcoin goes first, then you'll get the majors, the large cap coins, and then we'll get some of the smaller ones moving afterwards. So keeping an eye on this, the risk to reward opportunity was down at the bottom. And as you can see, that elevated itself very nicely off the bottom here and getting in just above the moving average. That was a 50% move on the books there. Filecoin, very interesting fundamental stuff on Filecoin. If you're unfamiliar with what's happening on one of your favorite crypto projects, hop over to the fundamental library. If you don't know where that is, I will put the link in the chat here. And if you need it, hop onto the Discord and I can give you the link from there if need be also. Let's just do a quick link here for you guys. And there it is, a link to the fundamental library. So just a free resource. There's hundreds and hundreds of people there, lots and lots and lots of articles. It's been running for years. So if you're looking at Filecoin and you want to see where it started, you've got an entire library of everything that's happened in Filecoin. And I keep it up to date. I'm in there pretty much every single day. Free resource. Don't need to do anything. You just hop in and enjoy it. I'll make sure your profile has access to everything once we're done with the live stream here. So Filecoin is launching on Ethereum virtual machine, and this is a huge development for them. And really, they've just seen so much success during this bear market as far as growth and use case goes. It's really quite impressive. And this green box is a little bit of a secret. We do have some charts down here that we call the value zone. And if you've been following with us in the Discord and you're one of our community members, you know all about that. These are the alts of high value, long-term, that are currently undervalued. We find areas of value. We start investing in them little bits at a time. We don't get too excited. We don't panic. And when those things come out of those bottom levels, you're going to see some massive returns. Anywhere down in here, we'll just take near the white line here as an estimate. There's a 450% move. I definitely believe that Filecoin will absolutely be worth 27.33 a token at some point in the near future. And I have a bag of it that I'm going to sit on until I get to a level where I'm comfortable. And this is a technique for investing. And during the bear market, a lot of people get frustrated trading, and shifting your mindset and shifting a part of the capital that you're using in the market into investing is a great way of kind of soothing the pain of a bear market, especially when you're perhaps like me, you're trapped in Canada and in Ontario, where we have no leverage trading. We can't short anything in crypto. All of the exchanges and opportunities that we can use to do that are getting blocked and banned. It's really tough. We don't even have Tether up here. Imagine that, a country without Tether. So that's where we're at. And building investment portfolios, I think, is absolutely the most profitable way of getting yourself through a bear market and kind of maintaining your sanity. So anyway, a little bit of a secret into what's going on there, and obviously the link to the fundamental library. Cake came off the lows here, not the opportunity we were looking for. It didn't. It gave the full retracement, lined up the fibs nicely, but it didn't give us much time to get in. And this is not one that we recommended for most people getting into. This dancing around the moving averages is not helpful. It's below both major moving averages, and it's not something we were too excited about. This is one we were excited about. We traded the crap out of ICX on the way up, and we've been waiting for this retracement. We've been waiting for this for so long, and it finally provided it. Now we're running into some resistance overhead here, but the long-term track of what we're looking for on ICP, now that they finally got all the junk around the project sorted out, there's a lot of drama. It's all in the fundamental library. We're looking at targets of upwards of about $20 possible, but lots of opportunity to get in. This is not about FOMOing in. I don't like that we're just getting the golden cross here, and we're already weakening that down. Perfect retracement as far as I'm concerned. Really like that aspect, but don't just get too gung-ho. Link, all right, these next two are another conversation pieces. Link is in a range. It is trapped, and it has been for a very long time. It dropped in here in May of 2022. For an entire year, it has been trapped in this box. That's it. Why is that box there? Well, the top, you can see they use this as a bit of a base to bounce off of on the way up. And then you can look at the bottom end here, and you can see where we found a lot of recent highs on the way up. A lot of reasons this box exists, but this is one of the very few alts, and it is a larger cap coin that is kind of in this zone where it's just trapped, and this is called a range. Trading in a range is one of the easiest ways to trade. So we've got the box in the middle. This is no man's land, and you can see how they respect that. When they're above, you sell or you go short. When they're below, you buy or you go long, and you just keep repeating the process. And that's how you get in and you get out. Now you can see that things recently have broken down a little bit and been much tighter. They haven't got the highs. While a lot of other crypto projects are seeing big breakouts, this is another sloppy breakout. Look at the blue lines here. Look at that trend. Perfect channel all the way down. Beautiful breakout, brought a little bit of volume, but it was mostly selling. And then they just flopped it. Not ideal. What else do we know about poles and ranges? We know that the direction that you came into that from above here, you go sideways, and you will typically exit with the same momentum. So our momentum is downward. And why do we have a green box down here? Well, if we're going to get lows on Bitcoin, I think you're going to get Chainlink for under $4. And that's what we're looking at there. But as far as risk to reward goes, this has been one of those ones that's been on our radar all year because this is a money-making machine. If you don't know about ranges or how to trade them, again, hop in the Discord, have a chat. It's free to chat with us, and we're there 7 days a week. So
now the other possibility there, Ti, is that's the boat turning around.
Yep, absolutely.
That's still a possibility with the other market-wide situation. I'm not saying you won't get that cheap chain link because that looks like a link could be in for some pain, but it's always possible that that poll that you're looking at is the one that finally fails and ends up as a reversal.
Absolutely. Back in 2018, we saw a lot of alts flop, just flattened, and they just stayed sideways forever and ever and ever. And they would chop 50, 80%. And you zoom out of the chart and you go, well, nothing's happened. Why are we so concerned about that? We're seeing that happen in some
pure accumulation in those situations.
It's definitely an accumulation zone, and it most certainly could go bullish with the rest of the market if that's where Bitcoin's going to go, but a little hesitation there for now. All right, so back to the fundamental library idea again. We've got Litecoin. Litecoin has a halving coming up this year, and if you're not sure what that is, it's the same thing that Bitcoin has. And Bitcoin is cut in half. The rewards given to the miners are cut in half every about 4 years. Litecoin has the same thing because it's essentially a copy of Bitcoin, just made to run a little faster and slightly different. So Litecoin's halving is coming up, and this is a major, major event. Every halving, as you go back, you can see a rise before the halving, a FOMO rally, and then a dump. And we haven't seen much in the line of FOMO here yet, but we have seen a gradual rise. We've got a dump setting up the baseline, and we set it back here. This might be the cheapest you're going to get Litecoin again for a long time, because even with the market being stale or Bitcoin kind of undecided, with the excitement around such a major event like this, you can get the pumps. We could see a $300 Litecoin and never see Bitcoin over 28.5, which is the mark I was talking about at the start of the video. That can happen. It's happened before. It could very well happen again. We could get a new all-time high on Litecoin. It's possible. It is possible. Now, I don't think there's enough force in the market, momentum for it right now, but getting up into that 150 or even that $200 range, very, very realistic targets for me. This one should be very high on a lot of people's radar. Matic is an interesting one. Fundamentally, this is one of the most dynamic and deep altcoins there is. There are very few projects out there with the depth and size that Matic has in not just in the crypto industry, but in the world itself. They have it's essentially just a faster working layer 2 for scaling on Ethereum, but at the end of the day, they're their own platform, and they're being adopted into so many different and unique areas of this industry. Like I said, I don't think there's anything else quite like it. I'm very bullish on the fundamentals of Matic, but this price action has been nasty. And we saw them pull back. They got into the moving average. We have a bit of a trend line here. Yeah, we broke it. We did the fake out down below, but that was our mark. That was our mark saying, look, if you don't have any Matic yet, this is probably one of those risk to reward spots to start moving in, up 30% since then. Track is an interesting beast. So if you follow in our with the community members, and you get our regular videos 3 days a week, you'll know that we've been watching Track for a long time. We've traded it into that first pump. We traded it in through the second, and we've watched it come out of this potential double bottom. We got 2 different necklines. We measured the move out. We got our 100%. We got out of the way. It's done a retracement. Where are we going next? We know where we're looking next. We're looking up above 75 cents here, up around 75 cents to $1. And you can see them trying to get it there. The interesting thing about the Track charts is they are wiki as all get out. They are always a higher percentage move than most of the other alts. Double-digit days for Track are every other day. They literally have such strange liquidity and movement for this alt. And it is a lower cap coin now, but they've got a great product, real world use case. And I think they're going to be able to do this, and they don't really care. This is one of those ones that stands out on its own. They don't really care what the rest of the market is doing. As you can see, it's down 7% today, while the rest of the market is green. But that can change in the blink of an eye. Using narrow stop losses on Track is very, very ill-advised. They will put in double-digit losses and gains in the blink of an eye. That is the wicks that you're seeing out here. That is the danger of this trading in track, but it is one of those projects that I'm very excited for. Now, one of the other big bangers that we've been watching is XRD. This thing has just tanked, desperately tanked, so poorly. And it set up this double bottom, or this Adam and Eve bottoming pattern. And we were able to trade out of it, but that target got hit and it just fell off the train again. So what we have here is what we wanted to be was an ABC, and we wanted to see a reversal in here, but they never gave it. In fact, look at that. They came back and took everything back. They wicked all the way back to the start. So now we've got almost a triple bottom happening here. But that wick was where we said, you know what? It looks like they're done for now. The problem being they've done the accumulation zone. Break, pull back, drop it. They're doing another kind of accumulation zone, aren't they? And they're stuck in here again. Does this one drop through the floor as well? I don't think so. I think that they finally got a completed product, a great review on it out there on YouTube. And I watched their live stream. I'm quite impressed with the project itself, fundamentally quite firm. And that opportunity there might be one of those last times you find this thing under that 4-cent mark. And this will be one of those projects, I believe, that's going to set up some use cases within the financial ecosystems of the future. They really have some very unique ideas about streamlining and creating efficiency in a market that is notoriously inefficient. And whether it's the XRD token and their product specifically, I don't think it matters, because I believe that the recognition that they're going to get for the work that they've done is definitely going to be something to pay attention to. And they'll be involved in the transformation of the new digital era of finance that's coming. Down below, both moving averages, not ideal, failed their golden cross here, so to speak, but I think they're probably going to be able to retrace that. So we're going to start wrapping it up here. We'll take a quick look. These are some of the alts that we go over every time we're in the recording. NMR is a choppy chart, nothing too much to write home on there. VRA has been an epic trade for us. We had 3 different entries here on VRA and just killed it from the bottom here. We did about, I think we only got 102% on the first one. Second entry was lower in the triangle here, and they came up and they pinned our target right at the top perfectly. It was, like some of those other alts, just nice to get that wick in there. And I believe we only got we got in after the breakout. Actually, I think we got in right here on that pullback of that red candle. I have to go look at the notes we have, but yep, that's right. There was about 72% of that 100% we got there. And we had a third entry on this pullback that we got to safety, protected that capital, and that obviously got lost here as they finally gave us the full retracement here, back to the 50 and a bullish bounce and a bullish day back into this major area of resistance here. So be careful of this, but when we're above this, what we're looking for out of here is a nice breakout, and that's your opportunity to get in on the next bullish move, is on the pullback after you get out of this tight spot here. Sometimes they don't give it to you. That's fine. Move on to the next one. But this gives you an idea of what we're looking at here on these charts. We do review some of the industry areas. We've seen AI get a lot of excitement recently, metaverse, NFT coins, and these lists are gradually expanding as well. There's Raptorium, the one that Mike has been mentioning. This is an interesting one. This wedge is curious to me, but again, just another sloppy breakout of these alts. What are you doing, guys?
It's all over the place. But the one thing that gets me, even on that tiny little Raptorium altcoin in terms of market cap, that's the first time in a year you've seen a higher low. The first time.
Yep. There's your higher low.
All over the market.
So something to be said for that. But if you're interested in joining us, of course, the Discord is free. Link is in the description below. If you want to contact myself or Mike, we're there on the Discord as well. And let us try to find a way to help you with whatever's hindering your progress. You don't have to pay us money. There is a option to be involved that way, and we go through charts and signals, like I said, 3 days a week. We catch up on all the fundamentals, and we watch the slower moves, or sorry, I guess the faster moves, the lower time frames on Bitcoin, and even some of the alts will get into lower time frames. But at the end of the day, it's really about creating a community, and that's what we're looking for, is just having an active community of people that are there to support each other. So hop over onto the Discord and Let us know what you think about the market right now. And yeah, we're having a rough day out there on the stock market. That's going to be an interesting weekend for Bitcoin. Let's see how it goes.
And the last thing I want to say, TI, is how long has it been since you've seen Bitcoin decoupled from the stock market, from the major indices? When is the last time you can remember that the major market indices of traditional finance went down? The DJI, the SPX, all going down, points that are significant to them, not in crypto, but to them. Going a couple of percent in a day is a big deal for the SPX.
Yep.
And yet Bitcoin is where? The opposite direction. And that has been a long time since we've seen that too. So many little details all over the place seem to be saying things look like they're changing. Doesn't mean that we've changed yet, but it looks like the start of something new.
Yeah, we were doing the recordings back last fall, and I remember talking about the way Bitcoin's responding and how the correlation between the dollar index and Bitcoin seemed to be definitely weakening. By the end of the year, we made a firm commitment. This is not a dependable signal anymore in this market.
Yep.
It's following the stock market much more closely, but even that started to falter now. We're really seeing a shift from Bitcoin behaving in consistent, regular ways that it has for most of the history of its life. And for the first time, starting to do some different things. And so relying on your indicators or your on-chain data or your order books, any one thing, it still changes, maybe not overnight, but these correlations do change. And being in front of those is a big part of what we do. We try and keep people protected. That's the number one thing, is protect your capital. And I haven't said it in this live yet, but I say it in every other video. I hate losing money. And so I use tighter stop losses. I get my capital protected earlier than a lot of people will. And I've shown you how to trade long, and we have a record of it successfully in a bear market. We've very successfully traded long throughout the entire bear market with minimal losses because we're extremely cautious about the risk. And we position size appropriately. We get out of the way as quickly as we can, so we don't have to deal with the bigger losses and the emotions that come along with that. Get your head out of the market. Just trade. It's not that hard. It's hard to stick to, though.
It's as hard as you make it.
It is as hard as you make it. Absolutely. All right. Thank you for the folks that jumped in the chat there. And we'll get this posted for everybody over in the Discord. And hop into the Fundamental Library. Like I said, it's a free resource. Links in the chat here. You can contact me as well if you are looking for that. And I hope you all have a great weekend. And thanks, Mike, for joining me. It's always fun to catch up on these.
Thanks for letting me hop back in here with you again. It's always a pleasure. It's good to see everyone. I saw a few people in the chat too. And as TI said, if you need anything, reach out. We're here. We've been here the whole time, all the way through from the very top of the market at 69, all the way to down where we are now. And we'll continue to be here as hopefully the market turns around or gives us new entries for that turnaround. Because whether we pull back or not, TI, whether we pull back or not, things have to change at some point. And if you are prepared for the change and you are willing to change with it, there's plenty of money to be made. So thank you, thank you, thank you.
Take care, everybody.